Good to see you again. It's been a little while. Welcome back, ladies and gentlemen, to my $112,500 dividend portfolio recovery. This is the first time in a little bit, it's been a couple weeks that I've had a full recovery of this portfolio, and I've also got some dividends on top of that. The markets have been on fire, and I want to break some stuff down for you guys, so let's jump right into it. Welcome back, passive income investors alike. Today I'm going to be breaking down everything going on with the portfolio as I usually do, along with some dividend income, and we're going to look at these specific stocks that are making the biggest movements in my two accounts, which we're going to get into in 1 second. But I just want to talk about a few things. Anybody that bought Tesla on that dip, oh my goodness, I've been raving and ranting about buying Tesla, and I just haven't had the funds to do so. I missed that dip, but I wouldn't be buying enough to make a big enough impact on my portfolio. But if you were, a big thumbs up, because man, it got way oversold in my own personal opinion. Other than that, we have Microsoft on fire. The tech stocks are coming back with a vengeance. Facebook's coming out with their own cryptocurrency, and I haven't made a video in way too bloody long, and I'm thinking about changing up the format on the channel a little bit, where I'm actually going to start basically just every single day posting exactly what my account is worth along with the dividend income. But let's get over to the account and I'll explain a little further. Alright guys, so let's take a quick peek at the tax-free savings account with the things that are moving the most, including that Microsoft. I can't get over the Microsoft as it runs on all-time highs again, just really pushing fumes and exhausts all the way to the top. Largest company on the planet currently as it stands, and I'm glad it's part of my portfolio. And I'm going to show you guys something really interesting toward the end of this video, not the very end, but I just want to show you something that I thought was super fascinating. But your savings account's been on a roll lately. As we can see, guys, we're sitting up way more. I think we're at 4,000, now we're at 6,000 from my last video even, because man, this account has had some crazy volatility through it. But we can see Apple's been on a tangent again. I want to see this pop over 200. I'm desperately waiting for that to happen. And other than that, my worst performers are starting to have some comebacks. Canadian Imperial Bank is coming off its lows slowly but surely, and the utilities are still hammering pretty good lately. And if we head on over into the other account, my non-tax-free savings account, I might admire that I got more dividends since my last video as well. We had some more dividends come in, not that much. Like I said, next month I'll be bringing in about $600 or $700 in dividends. This month I think it's just $200 or $300, and we've got most of that already. But in this wonderful account here, the one that was on fire at the beginning of this year, because I was buying these companies on major dips, including British American Tobacco and Altria Group, they've actually come way back down to almost what my average buy price is. Does this bother me? Absolutely not, because I ain't done buying. I have a hard time buying things when they're at all-time highs, but I have no problem buying things like, if it loads, British American Tobacco here, where it sits on its low. Why won't this load? Come on, load. Anyways, we'll take a look at Tesla while we're down here. So Tesla hit a low of 170, the high 170s, and I was thinking about just strangling together. Oh, now it opens. I was thinking about strangling together some money just to get any kind of shares in that 170 range. And I could have, but again, I ended up just sitting on the sidelines. I added cash to this account. Even we have $500 sitting in here as it stands right now. But it doesn't really bother me. What is happening here? Jesus. Calm down, British American Tobacco. I'm coming to you. Give me a sec. So Tesla, it got so oversold in my opinion. I made a lot of videos on it. If you guys didn't buy it, like I said, I didn't have enough money, because if I bought even like 2 or 3 shares of it, whoop-de-doo, I'd be up an extra $100. It wouldn't have really made that much of an impact on my portfolio. So I'm hoping it stays around this $200 range. I don't mind buying it even where it is right now. I just want to see it stay somewhere between, the 180 and 250 range, and I'd like to buy it closer to the $200 lower range than the higher 250 range. But because I have no control over the share price, I've gone from being 50% down on this up to now 34% down on this. I don't own enough of it to make a real impact on my portfolio in the short term, but I would like to add at least another 1,000 or 2,000 to this company this year. And of course, I'll let you guys know when that happens, but I can't stray away from my dividend investing goals. And honestly, I think Tesla's going to be an awesome company. But looking at my dividend goals specifically, the companies that I have my eyeballs really focused on are British American Tobacco and the drug sector, not the marijuana sector specifically, but the drug sector, because the entire economy has put the drug sector
into the shitter. They make these companies look like they are junk crap, and I don't know why. The books haven't changed that much, but when the markets came down in 2018, again, guys, I'm not advising you to buy the tobacco industry stocks or anything in the drug industry, like even the beer companies, guys, alcohol, just it's all been shoved into a basket of what people consider to be trash, and I'm going to gobble these things up like they're candy this year. This is where my main focus has been, just because of the high yields. And as we move over into my dividends specifically, guys, they fluctuate a little bit. I think my last video I said it went from like what was it, $47.50, $4,750 in dividends to $4,700 almost even, and now it's gone up another $20. You'll find that when your account's adjusting the dividends, especially quarter to quarter, they might change slightly, and it changes a lot. But luckily, the dividends are actually up overall, which isn't terrible. And we can see here I've got an average yield of 7.78 on British American Tobacco. MO is 6.4. Constellation Brands and BMO. I'm really happy with these positions as they are just starting positions. Again, I want to see each one of these somewhere, well, British American Tobacco and MO, I want somewhere around 10,000 a pop this year in each, and then Constellation, I'd like to see closer to 5, and same with Tesla, I'd like to see it a little closer to 5, or somewhere between 3 and 5,000 invested as well. And then the other account, my tax-free savings, which is the best account because all these dividends are completely tax-free. We can see we're doing incredibly well in here. I can't complain about anything. I wish I was buying a little more of CM. Like I said, I'm going to set some drips up, which essentially just means I'm going to use my dividends to rebuy back shares in some of these companies soon. Not yet, but soon, as I would still like to see SO get up over $500 in dividends, along with GEO Group to get much higher than it is right now, which is my highest yielding dividend stock out of all of them. But overall, guys, you can let me know what you think in the comment section below and what your portfolio looks like. But before I go any farther, I've done just some quick updates for you guys now that the account's literally fully recovered from a couple weeks ago. I really want to show you some books. I looked up some financials, and I just want to show you these because I think they're mind-boggling. So I'm just going to show you the total cash flow from operations and just show you how maddening this is. So this is a company that in 5 years went from doing $30 billion in revenue to $43 billion. Here's a company that's gone from doing $81 billion to $77 billion. So this company is actually staggered in the amount of money they've been producing from operating income. And here's another company. I'm just going to show you 4 companies, guys. Here's one that's gone from $10 billion in revenue to $30 billion. That means they 3 times their revenues in just the last 3 years. So every year they're pretty much doubling their revenue, which is absolutely absurd. And I got one more here for you, and this one's done roughly the same. It's gone from $12 billion in the last 3 years all the way up to $30 billion. Now, what are these companies? I'm going to reveal them to you one at a time, because when you look at these numbers, it's hard to wrap your head around. But here we have Amazon, guys. Can you believe Amazon has literally tripled their revenues? Like, it literally doubled them pretty much every year. Facebook. Here's one that's gone from 10 billion to 30. There's no balance sheet on the planet like Facebook's, but I just want you to admire the raw scale of this. Now, this one is a little surprising to some people to see that this is Apple, and Apple has actually been stagnating, which we've kind of understood, but they found ways to increase their bottom line over time, but their overall revenues have actually decreased and now are actually on the run again. So if we can see these numbers get back up into the $80 billion mark, something incredible could happen with Apple. But it's crazy how much money Apple makes compared to these other companies, yet it's the market cap is actually lower than Microsoft's, because Microsoft currently sits well over $1 trillion. But again, Microsoft just proved to the world that it's still a growth stock. And wow, I just can't believe what is going on with all these companies, guys. And I'm glad that I get to be a part of this incredible time in history.
Thanks so much for watching. If you guys enjoyed this video, slap a like and consider subscribing. I've missed making videos over the last few days for you guys just because I've been so caught up with doing actual shows, and it was my girlfriend's father's 60th birthday, so we had fun last night dealing with that. And I've actually been filming a lot of footage. It's just I think I'm going to get home earlier than I am to edit it, and I just never have time. So I have been really lagging on the last 3 or 4 days of videos, but this is going to start it off. I got a bunch more content coming for you guys, and I really hope you enjoy this. But I'm finding that most of you seem to enjoy specifically the dividend related videos and what is going on with my account. So I think what I'm going to do is 5 days a week, every single morning the market opens, I'm just going to kind of look at my account, see where it's at, and similar to these kind of videos where I'm just going to really look at my portfolio, where it's moving over time, and the stock that's returning literally